So before I talk about the strategy I use in trading boom and crash, I would like to talk about the market. So the boom and crash is part of the synthetic market. Like you have your volatility, your range, your jump, and the step index. So those are the synthetic markets. They are not part of the financial market. Now, these markets they move they are simulated markets that behave like the financial market, but they are not real markets, which means that there is nothing that is there's nothing that's fluctuating the market to go up and go down. Like now in the financial market, now we have the buyers and the sellers, and we also have news too. News events, like let me see, for example, gold. If there's news that the price of gold will go up, then gold will go bullish. Or let me say, for example, another thing that can affect the price of an asset. Let me say, for example, oil. If there's news that there was drastic event that caused loss of oil, which will lead to scarcity of oil, then the price of oil will have to increase. So it's just those kind of stuff. So the synthetic markets, they don't actually have all these kind of fundamentals that move the market or buyers and sellers, which means they are not controlled by anybody, they are not manipulated by anyone. So they just behave like the real markets, but they are simulated market. Okay, now let me just use this example. Like let me say you are watching football. You are watching football. Now if if you are watching football, it's different from when you are playing, let me see, the PS4, your PS4. So if you are watching football, let me say Ronaldo is the one playing, and if you are playing PS and you are using the Ronaldo player, they are different things. The one you are watching is somebody that they have already video, that they have that is someone that they are videoing the match. So that is like live, that is happening. But this the PS you are playing is simulated. Is yes, the player in the PS, which is Ronaldo, can have Ronaldo's skills. They can be able to code all those skills and anything, but it's not the written, it's just simulated, a copy. So that is how the synthetic market is. And now, how the question is, how are we going to trade all this? Because one thing that the synthetic have that is different from the financial market, one thing that they have that they are in common, both the range, the volatility, the boom and crash, is that they are very, very volatile. And we have some that are volatile than the other. So how do we trade all this kind of, especially boom and crash? So I'm going to be talking about boom and crash, but let me just say that the volatility, your jump, and your range with your step index, including your boom and crash, the way they trade them, the way I trade them is different based on the market structure and the way the market move. Like for example, the way I'm going to trade jump is going to be different from the way I'm going to be trading boom and crash. So now the boom and crash now, that's what I'm be talking about, the boom and crash now. How do I trade them? Now since they are simulated market, they behave like the real market, which means they will obey the rules of the market. What do I mean by the rules of the market? Now your technical analysis, the same technical analysis you apply on the financial market, if you apply them on the synthetic markets, they will obey them. Price action and market structure, the markets also obey those structures. The markets obey them. So we use this we use this price action, market structure. We use all those things that we use in the financial market to trade this. I use all those things in the financial market to trade this boom and crash. So just easy. Well, for me, I will say that the boom and crash is the easiest market. Is the easiest market so far based on it obeys market structure and everything. Both the price action, chart patterns, candlestick pattern, um, demand and supply zones, support and resistance. It obeys everything. Now, the strategy I use for boom and crash, because I've seen a lot of people have, like, if you search now, you look for strategy that is between boom and crash. Most things I see is I come across is the combining of indicators, the combining of two indicators, three or more. Sometimes it can be more than that. And they use this now. The way they use them is that if the indicators show a form of signal that they will buy or sell, it depends on the signal. Well, it works for them, yes, but I don't trade, or I don't trade all those. I don't like that kind of trading based on the rule of indicator. That you one rule of indicator that you should always remember when you're using it is that indicators lag. Indicators, they don't actually predict the future, they just give a statistics of what is going to happen in the market. Like, let me say, divergence is very common. Yes, divergence divergence shows that the market, like, if the price now is making higher highs and higher low, and divergence is making lower low and lower low, which means that the price is going to go down eventually. That is it. So it's just giving a statistics of what is going to happen, what might happen, is a possibility. You get. Now, the divergence doesn't mean that the market is going to sell throughout. So there's that sells now. It might come as a pullback, it might come as a reversal, it might come as just a news drawdown. So that is it. It might just come as candle and then reject back. So the way that is why we have strategy when we are trading all these kind of all structures. Now, for the boom and crash, I have part. I have for the boom and crash. Now, so before that, the another strategy also is the trend line. So all that, but today I want to be showing you my strategy and the way I trade boom and crash. So that's where I trade. Sorry. First of all, let me just tell you about the strategy. The strategy I mostly use them to in the financial market, and one of them is the high highs and high low strategy. I use them in the financial market, and I also use them in boom and crash. Another one I use is the trend strategy. I also use my divergence strategy too when trading the boom and crash. So I want to show you guys some patterns and some market structure that boom and crash respect. And this is going to be is from actually from screenshot that I had from the that I of market structure that I usually see when trading this boom and crash. So I'm going to be showing you those market structures and chart pattern. So look at the first one here. We have this market structure. This is for crash 1000. So the market structure that I'm seeing here is the Quasimodo. The Quasimodo is a structure that shows the direction of where price might go. Now, the Quasimodo is something like this now. If something like this now, price will come and move like this. Sorry. So this is how the Quasimodo structure is. Price will come like this. From a downtrend, break its previous lower high, come back and go up. So this is actually the Quasimodo structure. Price is making lower low, make higher high. Then Quasimodo, price will come down to this level. That actually correlates with something. It actually looks like a head and shoulder, but I don't classify this as head and shoulder. The head and shoulder is a pattern. This is actually a structure, because head and shoulder is a chart pattern that is basically a reversal chart pattern. But this price is just a structure, which means that price normally does not reach this place. So price might just come after reaching let me say a demand or a support zone, then go up. You see, so that is just it. So actually now the reason why I also classify this as a chart as a structure, not a chart pattern, because you can see this. Let me show you. You can see this. Because you can see this now. This is the Quasimodo come from here, went up, and it breaks this lower low. Now the Quasimodo now actually call this reverse Quasimodo based on price will have to come down. So price will have to come down to this level, this zone, before buying. So I actually took that as a sell. Yes, I took that as a sell. And if price should give me any signal here for buy, confirmation to confirm my buys, and I will start buying. So I actually took that sell, which is why it's just a structure. It's just a structure. So when it got here, I saw that this was a support level, and I saw that price might go down and give me a Quasimodo structure, and I took my sales from all the way from there. So that is it. So the other pattern now we're going to be looking at now. Okay, so that is the Quasimodo structure pattern. This is a flag, a correction. A correction is a type of a flag. So that's it. So this pattern now, market now come down with a correction, give a little impulse move, give an impulse move up now, and it's correcting. We're expecting market to give an impulse. So this is the type of movement that price makes. Actually, it's the type of movement that price makes. Actually, this impulse correction, impulse correction, impulse correction, impulse correction, and we saw that price made the reversal here, which was something like this. Price, after impulsing, corrects. Okay, this is the movement of our price was supposed to move impulsing. Now price now it impulse now and gave this correction here at this support, level. We're expecting price now to buy. So that was it. That is this next structure. Yeah, the next, this is a this is a channel. We'll call this a channel. A channel is when price is moving in a bearish or a bullish trend. For example, you can see this. You can see this the trend line that is connecting. The trend line that is connecting, and we can see price is moving in this bullish trend. So this is, we'll call this a bullish channel. We'll call this a bullish channel. This is a very nice pattern to be trading, based on we can buy from here and scalp sales from here. The reason why we scalp sales from here, based on the overall, I don't like going against the trend, but if I see an opportunity to sell, I will sell, but maintaining my rule. So I will actually take this as a scalp sell, because the buying move are always stronger, and so you can scalp this sell. Then if you give a confirmation here, we can buy here. If you give the confirmation here, we can sell, buy, sell, buy, sell, buy, sell. So that is how the channel patterns work. So actually this okay, so actually this was a reversal. We spotted this reversal here. So this was how we spotted this reversal. First of all, we saw this, the price was making higher high. It was an uptrend, higher low, high high, high low, high highs. Market came here and broke this and give us a pattern, give us a pattern right there, and then market broke this structure, because there was a support, and market broke that support, and there was also a demand zone there. So market respected it and started selling. So we took sales from there, and we also took other sales from here too, and started maximizing down. Now we took when I took my first sell from, because I knew that market was going to sell, so I actually took that sales from here. And the reason why I took this other sales from, because I saw that market broke and respected this zone where I was correlating with a support and demand zone. So when I saw that zone, I actually went down. I actually went to scaling, and you can see from here. After I got this retest, I saw this correction. I saw this correction. The price was moving. This correction, I saw this correction. The price, so I took sales from here to maximize my profits down to the downside. So that was it. Okay, now this we know this pattern now. This pattern, familiar pattern by traders now. When price is moving, this is actually a type of flag. The channel is also a type of flag. I call them flag, but this type of flag now we call this the falling wedge, in which price is falling to rise. Price is falling to price is actually falling. So this is the falling wedge, and we also have the rising wedge. Rising wedge looks something like this. When price is rising and it falls to the downside. Then the falling wedge, when price is falling, then we'll buy to the upside. Then we'll connect this, we'll try and form this channel here, this triangular channel, and we're actually waiting for the breakout, so we can buy. And as you can see very well, we saw that market gave a divergence in this place. So that market gave a divergence in this place. Higher highs from here, lower low from here. So when we saw that diversion, it was signal for buying. And we saw that price stopped making lower low, higher high, lower low, higher highs. And instead of making a previous high, to make a low like this, price made a low that would break this price, started making this lower low, then broke out to this candle. This was actually the candle that price broke out with, this bullish candle, and we knew from there that we're going to take our buys. So took our buys from here, minding a support here we'll use as our TP zone. So that was it. Okay, so this is under structure. Now this was the wedge. Price has already buy now to this support level. Now we saw it was time for sales, and we took our sales when we saw that price respected this support. Price actually respected this support. So price actually respected this support here, this support zone. Price actually respected down. We knew that price was going down, and we took our sales from there. So you can see how boom and crash is basically price actions that are in the financial markets, and we're using them, those price actions, also using support and resistance, demand zone, and we're using demand zones and supply zones, chart patterns, candlesticks pattern. So this was a head and shoulder, and also we can see this. I forgot to tell you guys this. When I took this trade, I actually used one of my strategy, which was the the pattern in pattern strategy. Which I used to confirm my buys or sells that I actually do from here. And let me show you how this pattern in pattern strategy is when you see multiple pattern in one pattern. That is, let me say, if you're looking at the market structure, you can see double top. The same place you can see head and shoulder. The same place now you can see on another chart pattern. So that is the pattern strategy. Now, when you are seeing both patterns that are correlating for a particular direction, this gives you more high confluences. It gives you increase your probability of the trade that you're going to take. That's increase your probability, increase your um decrease that the possibility of the trade going to your direction. What do I mean by that now? Now look at it now. If let me say you see a structure, and you see, for example, this head and shoulder structure. Now in the same head and shoulder structure, now let me say you go to a lower time frame, and you wanted to take your sales right from here. Okay, now let me say you saw this So the market has already made this head and shoulder, and when you wanted to take your this thing here, your sales from there now. Now, when you went to a lower time frame and to look at this particular place of price, now you saw this now. Let me see, for example, you saw this. Let me see, for example, now you saw this double top now at this zone now. This is a double top. I will know that the double top is a chart pattern, a chart pattern reversal that matter. So this is a chart pattern reversal that we signal sells, and this will give us high confidence in that we can take our trade. Now we're seeing a head and shoulder in higher time frame, and we're also seeing our head and shoulder. It might not be a different time frame. It might be that the same time frame. You get that is how the chart pattern works. Might be that the same time frame. Now, it might be in one time frame you can see multiple chart patterns adding to your direction now. Now here now, let me see. You saw this double top now. Now you know that this is a high confidence is now that your head and shoulder, which is signaling for sell, and you're seeing double top now, which is signaling for no sell. You can take your trade and let your trades run in profit. So that is it now. On that now that we can on that let me give another example now. If we're seeing this wedge now, let me see, we're seeing a rising wedge. We're seeing a rising wedge. We're seeing a rising wedge, and we have a support here. Now when price approaches support now and give us a double top, it gives us a double top now. The confluence is now of us now. Normally for you to and trade this pattern, you're actually going to wait for a break now. But you have seen this double top now. You have seen this double top now. Since you have seen this double, this is a high confidence now for you now to take a trade now. And let me see, for example, now you saw a bullish engulfing here, and let me say you saw an Indoji, or you saw the same bullish engulfing, or you saw dominant break for buy. That's a candlestick structure. You see that all those chart candlestick pattern now. Now this will give you more confidence now to take your trade and let your trade run in profit. So that is it. Now let's look at this now. Let's see the chart patterns that I will see now. Now for applying my pattern strategy now, I will see multiple patterns in one market structure. Now see this now. If we're looking at this area now, for us now to take a sell, see that price has come into a strong resistance level. Sorry, the price has come to a strong resistance level. Now from here, see that price has made left shoulder, head, and the right shoulder, maximizing sales. Another pattern now that we see again is the double top. The double top. See, price going down now. Another pattern now that I see I do see again is this. This is the okay. Let me just draw it well. Price was actually coming from this direction, and we saw that price give something like this. So this is like a flag. The price broke out and started selling. So that it has multiple chart patterns in one structure, and we use that as confidence for us to take our trade. So that's it. So when I saw that, I knew that from there we were going to take our sales, and I took my sales from over there and let my profit run, and I scaled in again from this area. So now this is a flag. Well, come on with the flag. This is a flag. Price made a flag, and see, this is a flag pattern. So this is a flag pattern that we used. So yes, so the same pattern. This is a flag pattern now. The same flag pattern now that we can see a head and shoulder, and double top. So this is the market structure of how trend change works. I use my trend changing structure for looking for reversal, for looking for reversal of it if a trend has ended. Now you can see here from here that we had a bullish run before this sells. Now how did I know that the bullish run was over before I could take my sales? Now simple. Price is making high highs, high low, high highs, high low, high highs, high low, high highs. Now market went down again to make lower low. Market was supposed to make a higher high but didn't. Market failed and made a lower low instead, signaling that the buyers are weak. Now market has broke previous low. Market has broke previous low. It retested and gave us a chart pattern and started selling. So in maybe my next video I will talk more about this, how I observe the how I know when the end of when a trend has ended, which is, let me see, for example, when a bullish trend, I know when a bullish trend has ended and when we're entering downtrend. So I can talk more about that in my next video. So the other chart pattern now that we see, okay, actually here we saw, okay, from here now this is a double top here, this is a double top right now from there. So that's it, market came and retested the neckline and started selling. And that thing I do see from here, which I want to draw to our attention, which is the demand zone. Demand zone. This bearish engulfing, demand zone. Price went in as a retest and started selling out to the downside. So that was so okay. This is actually the 5-minute time frame, and I saw this flag, the same flag. Okay, now I use my trend change strategy now for this to take this sales now. So I actually saw that we're in a bullish trend, and I showed that the bullish trend has ended and we're entering the downtrend based on we're making higher highs, higher low, higher highs, higher low, higher highs, failed to make a higher high. We saw that the buyers now are weak and price now has breaked the lower low. So now what we can expect from me, price might sell down to the downside for little my retest and come back and start selling. So that's it. So this is a double top. So from this now we can we see that these patterns now that we use in the financial markets, like USD, Aussie USD, gold, Nasdaq, we see that the boom and crash markets respects them, and it's not only in the higher time frame like the 4 hour, the 1 hour, they also respect them down to the mini time frame. They respect them down to the mini time frame. Yes, they respect them. So in my next video I will do a live chat. In my next video I'll let me see, I'll either be doing either I'll be talking more about um how I analyze the market in my next video, or I'm going to be doing a live chat of an account I'm going to trade for in this thing, and the goal of that account will be to double that account. So we're going to have a goal for that account. So it might be doubling of the account, it might be reaching a particular target, but my next video I'm still considering it. So those two things, I will either be doing a I will either show you people how I analyze the market before I take trade, how I prepare for the market. Remember, proper preparation prevents poor performance. So I will either be showing you guys how I analyze the market before I take trade, or I'm going to be doing a live chat of an account that I'm going to be growing, and we're going to have a target for this account, that when our target is met, we're going to withdraw and buy some sweets. So that's all guys. Next time on my next video.